Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Something you will know by me if you're new to the channel is I love networking with other amazing investors. Something I've always done is stay in my lane. Hence, one rental at a time was my story of buying properties out of the MLS. Kind of boring. Since I've been retired, I've met a lot of amazing people, such as our guest today. Ty, how you doing?
I'm doing well, Michael. Thank you for having me.
Yeah, and if folks don't know, Ty has an amazing playlist on this channel. We do something called the Friday Weekly Wrap-Up, which I look forward to every week. But something Ty reached out to me on. Ty is a member of my course called How to Get Started One Rental at a Time. He reached out and said, Michael, I want to contribute. I want to take my 20 years plus of experience and add to the course. I want to create a bonus section. So we talked, and he has brought something to the course already, which we will be adding around a concept I have zero experience. One thing you will know about all the bonus material, these are contributions from others who have experience. I couldn't talk about pre-foreclosures. I think pre-foreclosures were a big deal in 06, 07, maybe 08, depending on your market. I think they might be a big deal in 2023, but yet I have zero experience. So Ty, you've already created content. I'm in the process of uploading it today, but why don't we tease the audience about what they can expect to see? Because you've sent me 2 videos and 2 documents already, with the 3rd video coming. What are people going to see?
Yeah, so thank you, Michael. I just want to say to everybody out there, Michael is an incredible giver, and I think, and I know that's how we were attracted to each other. We met at basically, it was almost like a free event. It was a one-day event where it was like $20 just to cover the cost of the room or something like that. Yeah. Michael is a go-giver. And as you know, both Adrian and I, we have a Foundation Builders and Evo community where we are also big into contribution, big into giving. And so I've got to say that, I've had a lot of different mentors and a lot of different people over the, 3 decades. I bought my first deal in 1993. Wow. Became a licensed agent to become a broker, 1994. Over, a couple thousand plus transactions closed. But I want to say that this, for the audience, I have learned so much about fundamental investing from you, Michael, and from the way that Michael has such a systematic approach, the way that he looks at the economy, all the deep study that you do, Michael, in terms of the daily news. And, honestly, we do Friday Financial News Wrap Up, where I get the honor and privilege to interview you. But I look at it almost as like my personal coaching call with you of what's going on in the economy. And not only that, but how to adapt. So I am honored, privileged to be a part of your community, to do bonus material. The bonus materials, I think it's great, because what I talk about is pre-foreclosures, and specifically what I talk about is direct to seller. Yeah. So in the 2 videos that you're going to upload today, I break down, here's the opportunities with pre-foreclosures. It's, as we're doing this video today, is May the 31st, 2022. We are going to see a huge spike in pre-foreclosures, and we'll define and talk more about that here. But where the opportunities are, I believe, especially direct to seller. So
yeah, so this is the key, right? Pre-foreclosure is a term that I first heard back as the 06 market was rolling over. You started doing this in 93, so you saw the cycle before that. Pre-foreclosures are interesting, especially these days, because of all the systems, right? Like I have brought PropStream, for example, onto my platform. They have, the data lake and all this stuff. One of their searches is pre-foreclosures. The other thing that should be known, I've talked about, is last year, we only had 152,000 foreclosures nationwide. That is historically low, because essentially it was illegal. If people follow my material, you know that I think a recession is in the offering. I think there's a very good chance that unemployment at least doubles. And people have heard me talk about that the foreclosure process can take a lot of time. That's why when you talked about, hey, Michael, I want to do my bonus material around pre-foreclosures, I'm like, awesome. Myself, never done them, no experience. I need all the help I can get. And I think marketing to pre-foreclosures becomes a huge part of building a pipeline, especially if you could go direct to sellers, because there's going to be a lot of people who got in a bad spot. They got unemployed, they have to move, whatever, right? And a pre-foreclosure, there's a lot of time between the filing of a notice and ultimately being evicted after a foreclosure sale. There's a long time to hunt, but you have to hunt a certain way. I think you have to be, one thing that I liked about the material that I looked at is the conversation with potentially the seller who's going to lose their home. You're trying to be the right answer in the nicest way possible. So just talk about what the two videos that I have already, what are people going to see?
Yeah. So what we talk about in the first video is how to actually curate a list. So it's really about how to go in, look at, and find specifically, like, so in California, we have a two-step process for foreclosures. The first part is called a notice of default. The
NOD,
second part,
yep.
NOD, yep, notice of default, NOD. The second is a notice of trustee sale. So, and I'll just quickly break that down in detail. Like, here's how you curate your list. Here's how you look at it. But ultimately, the notice of default is an official legal warning. The notice of trustee sale is when the house is actually going to go to public auction, the foreclosure steps. And I just want to also say this, because you and I talk a lot about this in the different videos and things that we've done over the months and year. I don't believe, and I think Michael's probably have saved mine, we're not going to have this tsunami of foreclosures or a big bubble or a tidal wave of Michael shaking his head. No, we're not going to see this big giant clickbait bubble burst in the market like in 08. Would you agree, Michael?
Yeah, the chances that we get an 08 repeat, which again, I have the numbers and I've shared the graph, was 3.2 million foreclosures, meaning trustee sale, the end process, not going to happen. That's a 20x over what was last year. That said, we are going to have a 500, 600, 700% increase, right? Yep. So if you want to be a channel that talks about percentages, I would say a 500% increase is a crisis. It is going to happen off a ridiculously low number. A 500% increase off 150 is 750. 750,000 foreclosures is still lower than any traditional year, X 2020, X 2021.
Yep. Spot on. So let's be really clear. We're not calling for this big tsunami of foreclosures or pre-foreclosures. However, we do know with the recession coming, with the changes in the economic environment, we are going to see a significant increase, Here's what, and I want to just break this down for the viewer. So if you think about foreclosures, you have a couple of different levels. Foreclosures, the way that most people talk about them is bank foreclosures, REO assets, real estate owned, where a bank actually repossesses the property, evicts the owner, the previous owner, takes that property back, gives it to a broker, they clean the house out, and then put it on the market as an REO. That's what we saw in 2008, 2009. Michael, you picked up a lot of those assets.
I did, yeah. And again, people, a lot of channels don't have experience with that crisis, right? That is really the end. And what I want people to realize, there's CoreLogix did a great 10-year study. Maybe we'll talk about it on Friday when we get together again.
Yep.
That showed state by state. In California, we peaked, meaning foreclosure crisis, in 2009. Other states like Washington, I remember, was 2013.
Yep.
So you've got to know your market, your buy box, your area. The other thing I want to say is I think we're not going to have as many foreclosures as last time because of two reasons. One, there's now pre-foreclosure lists and processes, and there's really a way to go have those conversations. But second, it's the debt structure. Yep. You guys don't understand. The debt structure in 08 was the toxic asset. The house was fine. The asset that was encumbering the house was toxic. You did not want to take over that paper. So the only way to wash it was for the owner of the paper, the bank, to say, okay, well, I signed a contract that said I will collateralize this house against this note. The note's toxic. I guess I get the house. And then they sold it. Today, 30-year debt, 98% of mortgages coming into the year were fixed rate. Most of those below 3.5. The debt's not toxic. So I think there's going to be, during the workout process, which is I was so happy you did pre-foreclosure, there's going to be opportunity to take on that asset, which is the debt. The debt last time was toxic. Today, I think the debt's an asset.
Spot on, 100%, 1,000%. And just so you know, Michael, we haven't talked a lot about this, but I actually, like, from 08 to 09, I had to do a massive pivot in my business where I was just basically fixing and flipping and started getting into land development. And I lost a lot of money because I was over leveraged doing land development and outside of my lane, something I wasn't an expert in, right? Because I was great at residential, I thought I'd be great at development. Wrong timing, right? But I had to pivot hard. I became a broker for Fannie Mae and Freddie Mac. So you can imagine my biggest years in my whole career were 09, 10, 11, 12, 13. We were doing hundreds of transactions because we were helping clean up that mess of all the toxic loans, all the toxic debt. Today, Michael hit it so spot on. These loans that have been originated over the last 10, 12 years have all been fixed rate. They've all been low interest rate environment. So today, what's unique, so if you can imagine for the audience and the viewer, you have where we talked about where the bank repossesses the home. And there may be some of that. A lot of people are talking about that. I don't think that's going to be as big of an opportunity or a big market. I don't think it really hits that level. What I believe will happen is just above it, where you have the notice of defaults, the notice of trustee sale. We're going to call it pre-foreclosure because that's universal nationwide.
Okay.
Where I believe is the opportunity is going to be is to direct to seller. So investors going direct to seller, which is what the bonus material that you're going to be uploading, that's a part of the course now. It's about how to approach, how to curate that list, how to approach, how to have those conversations. And then the third video that I'm going to do for you, Michael, is where I'm going to actually talk about the offer structure, specifically subject to, right? Huge opportunity. Our dear friend Pace Morby, Laura Morby, right? That's his whole entire course and universe is about sub 2 and creative finance. We're also going to break down, how do you make an offer, a creative offer? How can you take over the debt subject to? So that's going to be the third piece of it. So again, for the viewer, let's be really clear. We don't believe it's going to be a bank-owned foreclosure market, at least not a big opportunity. We believe the big opportunity will be for agents and brokers, as well as investors, to be direct to seller, dealing with pre-foreclosure by providing great solutions, helping people out of their problem, helping people get I love this term, by the way, fresh start, because that's what somebody, if they've lost their job or if they're struggling economically and they've got this house, the fact that they can get a good chunk of cash and go get a fresh start, that's going to be a benefit and a solution for people. So
this is why it's so important. Again, I stay in my lane. I could easily read a bunch of articles and try to create content. It's not my thing. I have no interest in doing that. I want to attract other go-givers such as yourself to go, hey, I got you, Michael. I've been doing this 30 some odd years. I was big into this. Let me create content for you. And we're going to just add it for free. It goes right in the bonus section. Ty, pre-foreclosures will be up later today. If you have my course, it's free. If not, get the course. Bonus material going up all the time from amazing folks. The last thing I want to close on is timing. From the NOD, the first notice of default, to ultimately exiting with the bank taking ownership. Would you say it's hard to rough and tough this, but I'm going to ask you to try. You have about 6 months on average. Is it 9 months? What is the average between the first NOD and ultimately the bank taking it most of the time?
Yeah. So the way that the civil code and statutes, as I understand them in California, is it's about 120 days of timing from the notice of default to when they can officially do the notice of trustee sale. Now, there's been a lot of what I would call overlays. So there's been a lot of statutes to protect, even just like his most recent COVID, right? Because of COVID and CDC, and that's a lot of states have adopted special provisions and special overlays of the law. So Michael's spot on. It's about 6 months. And the truth is this, I want to be really clear. The bank, the mortgage company, the servicer, whoever's operating that debt and collecting the loan payments, or now not collecting loan payments because somebody's in trouble, they do not want to own the property. It is taboo, and nationwide, it is bad news. Bank of America, Wells Fargo, and all of them, big or small, they do not want to foreclose on people. They do not want to they don't want the negative publicity. They don't want the bad debt. They want to work things out. So let's be really clear. It's usually a very long and drawn out process. And if the people, by the way, doing good by doing good, there's a lot of times where people just need a little, like, so one of the things we talk about in the videos, and I'm going to also in the third video, is there are going to be people that maybe just need a good piece of information. Here's what to say. Call the bank, ask for a forbearance, ask for a loan modification, because some people can get a restart and keep their home.
That's
and
awesome.
So, yeah, so you can actually be doing good by doing good, but there's also people that are maybe going to get into a forbearance, get into a loan modification, and they're not going to be able to really, ultimately it's a Band-Aid, and they're still going to need to sell the house and get a fresh start, get some cash, go back to being a renter short-term, whatever the case may be. So I just want to say that, yes, it's about 6 months. That was a long answer, but it's about 6 months. And I think for everybody out there, you want to, number one, do yourself a favor, buy this man's course. It is the best course out there. It's the best value. And it's interesting. I've bought, I would say, dozens of courses and dozens of mentorships and masterminds, and even buying your, how much is your course?
$320.
It's ridiculous. $320. And Michael literally breaks down some of the basics of the basics of the basics of discipline, daily discipline to study your market daily or twice a day, understanding a buy box, right? Not buying alligators. I see so many people that call me that I'm talking to, and they're like, oh, I'm going to do this deal. And they start describing the deal. And I'm like, how are you making money? It's an alligator. So you do such a great job. Michael's course is tremendous value. Plus not only that, but the way that, he brings in experts and brings in bonus material. Buy the course. Just do yourself a favor and buy the course.
There you go, Ty. Thank you very much. We'll talk on Friday. I am so happy to load this pre-foreclosure because, again, I think it's a skill set. A, I have to add, never done them. And B, I think it will be a big part of a lot of businesses in 2023. So, Ty, thank you very much. Great timing.
Thank you.
All right.